FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Gary Lutz. And gold has made a little bit of a move since the first of the year. It really turned around right on the first of the year. Little pullback Monday, a little bit on Friday as well. But the person you're about to hear from is hardly dissuaded. He's the author of the book $10,000 Gold, also CEO of Bullion Management Group, Inc., talking about Nick Barisheff. Heard him here before. Nick, welcome back.
My pleasure, Carrie.
So, hey, you've been saying this for a long time. I mean, published the book over a year ago, and, you know, I never doubted it, but I'm sure a lot of naysayers out there, particularly in the mainstream media. But what's playing out now, no surprises to you, right?
Well, no, we're in the early stages of the currency war that's being talked about at great length. You just don't read about it, to any great extent in the mainstream media. I got fed up over the holidays, so I wrote an article that's on our website, and was out with our Bullion Buzz a few weeks ago, called "Challenging the Mainstream Media Propaganda." And they, full kudos to them. They've gotten better than the Nazis did. It's really, it sounds offensive to say that, but the propaganda is really prolific in terms of both what is said and what isn't reported. Equally important. And unless people start thinking for themselves and getting up to speed and looking at kind of alternative media on the internet, they're going to have some pretty painful financial times in the future. So my message is you can't sit back and just watch CNN or CNBC and expect everything to go happily along.
And less people are watching CNN and CNBC than ever before, right? Their audiences are...
At least it's going in the right direction. Now, the only challenge you have is you have to be careful, what you're reading on the internet, since there is no editing, and sometimes it's not accurate or factual, but at least you get to decide on the accuracy. So that's it. And once you get to know who the credible authors are, then you don't get led in some wrong path or some other hidden agenda or whatever.
Right.
And at least you've got the full spectrum to look at.
Well, looking at the euro right now, and its waterfall decline, particularly against the dollar, but what happened with the Swiss franc, with the breaking of the peg, anything surprising you there?
Well, no, like when you look at the euro, the last 30 days, the euro is up nearly 20%, where the Swiss franc is down 1.5% in gold terms, right?
Right, sure.
But, you look around the world, Canadian dollar is, gold price in Canadian is up 17.5%. In euros, it's nearly 20. British pounds, nearly 15. And Australian dollars, nearly 13. Russian rubles, 32%. So it gives you a flavor. We recently did a comparison chart in one of our Bullion Buzz chart of the weeks, where it showed the local equity index priced against gold in the local currency. So year to date, at that time, gold had outperformed all the equity indexes except the Japanese yen and the US dollar.
So should be telling you something. And if you go back, to 2000 and do that analysis, then it's virtually outperformed everything, right?
Right. And this is the thing that's important. And, even if you're a sophisticated hedge fund manager, in some cases, they're not focusing on the denominator. So in calculating investment returns, you've got a numerator and a denominator, and people tend to focus just on the numerator. What, has the Dow done? Well, what has it done in what currency? So depending where you live, it's all very well to talk in US dollars at a macro level, but I live in Canada. I spend Canadian dollars. So I have to think of things in Canadian dollars. So I look at gold in Canadian dollars, and in 30 days, it's up 17.5%.
Pretty substantial. What's your thoughts, Nick, about the Greek elections and the effect that it's going to have ultimately on gold vis-a-vis the world's currencies? Is that just a minor blip, or is it kind of like the straw that broke the camel's back?
Well, it's hard to tell at this point in time because we don't know how much money they're prepared to throw at it. So I mean, they're going to likely make concessions, cut the interest rate, cut the maturity dates, that kind of thing, and potentially throw money more newly minted currency to preserve the euro. And this was the same thing that was going on when gold peaked at 1900. So the issue of the risk of the the rats leaving the ship kind of thing is once again up in the air, and the mainstream Keynesians want to preserve the euro at all costs. So will they? So now you're getting into more and more people questioning that the central banks aren't omnipotent and maybe not even as they make out to be, because as far as the economy as a whole, it hasn't improved. So things have gotten worse. They're just better at manipulating the statistics, and we can go on a long discussion about that. But if people actually look into it, they say the things that are meaningful to people. I mean, their wages are going down, true unemployment's going up, more people lined up at the food banks, So all these aren't the signs of a, healthy economy. IBM just announced this morning it's laying off 110,000 people. 110,000.
Those are good paying jobs for the most part, right?
That's right. So we're getting some part-time jobs, we're getting low-paying jobs, and we're getting people dropping off the unemployment, and voila, magically we have lower unemployment. But the people's real wages have been, I think they're lower today than they were 20 years ago, believe it or not.
Oh, yeah.
Participation rate's lower than it was 30 years ago. And that's pretty sad, given population has been growing and growing and so on. So these are concerns, and it's on a global scale. Mainstream also doesn't report, what's happening in, Venezuela, Brazil, Argentina. You want to see some bad numbers? Never mind the Greeks. Look at those.
Yeah, we know that. I've seen that. People really rising up, right? In the streets.
Sure.
Outraged.
Now we got some new. Well, black swan's probably the wrong word, because the black swans are surprise events like the Swiss depegging. No one was expecting that. But you've got other things, that are going to lead to problems. King Abdullah dying, it's big unknown. There's a lot of potential for rebellion in Saudi Arabia amongst the Wahhabi sect, particularly, and that's bin Laden's kind of group religion, if you will. So they could lose control of that, possibly. Everybody's happy with the oil price that costs them $30 less to fill up their gas tank, but nobody's looking at who the next layman is going to be due to the junk bonds used to finance the shale oil drillers, and where that leads to, plus the unemployment and the bankruptcy amongst the shale drillers has already started. So the fact that you're saving $30 a week on gas doesn't mean a whole lot if you're unemployed.
Especially for the companies, right, that are really getting killed, and they were the backbone of the economy, such that the economy was, right?
Well, the problem with shale oil has been that the life of the shale oil wells is dramatically less than the conventional oil wells. So you got to recoup your capital costs out of a much shorter lifespan. And if the prices go down, it's going to take that much longer to recoup your costs. So apart from current break even, there's break even on your investment, which most of them, aren't going to break even on their investment at this point at these kind of prices.
Not going to happen. So, so the decline in the price of oil, while appearing all well and good for consumers, is really a further nail in the coffin of the economy, world economy, isn't it?
That's right. So these are the kind of the headwinds. They're not black swans, but we've got plenty of things to concern ourselves that can pop out of the woodwork. Russia is, of course, a big consideration. I mean, it was completely not reported that they turned off a gas line flowing through Ukraine that feeds 6 countries.
Right.
Because they accused the Ukraine of siphoning off gas. Well, it's not good news if you're in one of those countries because it's starting to get cold.
Yeah, that was a real body blow to those countries that aren't getting it, and you got to wonder why that got less press than it really should have, because it's pretty major event on the world stage.
Maybe the Ukrainians were siphoning gas. Maybe it was a justification, but it's likely as not to be a retaliation with sanctions. In the meantime, Putin's buying all the gold he can get his hands on. Even if he accepts U.S. dollars, it's just an intermediary transaction. The U.S. dollars are immediately used to buy gold.
Yeah.
So Putin, China, India, South Korea, just to name a couple, are accumulating big rounds of gold, while at the same time the paper markets on the COMEX keep getting hammered every once in a while with naked shorting.
Yeah, we see that happening quite often. Every now and then, the market seems to look close to unraveling, or it takes a big hit, and then you wonder.
But it's really not the market. If you look at it, should be obvious to anyone. This is not, normal market conditions. When you don't sell 1.5 billion, dollars worth of gold in 5 minutes one morning.
Yeah,
that was the last go round last fall. Because if you're any kind of a trader, you own gold, like that's just going to guarantee your lowest price possible. So this is obviously being done to reduce the price, and it's a naked short.
Mm-hmm.
And what people don't comprehend is when the paper price on the COMEX goes down, you've got massive redemptions on the GLD, and unlike an open-end mutual fund, those don't go back to the market; they go back to the authorized participants. So the redeemed physical bullion, which was borrowed gold in the first place, gets returned to the authorized participants, which are likely the same guys that shorted the COMEX. So the thing we don't know is that gold being returned from the central banks where it was leased, or as many suspect, it's being shipped to Switzerland, remelted into Chinese bars and sent to China.
Yeah, there's really no way to find that out, is there?
No, but we'll have pretty good indication when China, has, I think it's 1,600 tons right now, officially.
Mm-hmm.
And the estimates are that they really have anywhere from 4,000 to 6,000 tons.
Right.
Since GFMS and CPM have already accounted for all the supply demand, where does that gold come from?
Yeah.
And it's only the above ground stocks. And the second question is the U.S. Geological Survey shows dramatically more gold being exported by the United States than is mined. Where does that gold come from? Above ground supplies. Who's got that much in above ground supplies? central banks.
Mm-hmm. Do you think the central bank is actually exporting gold to China, Nick? That's
central banks.
Yeah.
Frank
Fed.
and Oil.
Yeah.
There was one of the first books I bought back in 1998, and it was called The Gold Book, and he did a thorough analysis of the gold leasing and swaps and everything else, and he concluded that the central banks purported to have 32,000 tons, and they actually had 16,000 tons of gold and 16,000 tons worth of IOUs.
Right.
And then he updated that, I think, in about 2002, and he estimated that the leases were then up to 22,000 tons out of 32,000 tons. That was 2002. So when you add that and say, well, how come Germany can't get a lousy 5,000 tons? It takes them 7 years to return 5,000 tons. And when they do return some of it, it's not the right serial numbers. So
it makes one wonder, that's for sure, right?
And, Germany wasn't allowed to audit it or even see it. Mm-hmm. So when this all comes to the surface, the credibility of central banks and fiat currencies is going to dramatically decline, and the gold price will dramatically rise. That's like one aspect. And the correlation between U.S. debt and gold is almost a perfect correlation. It's like about 97%. So that's not slowing down, but there's been a diversion for the moment. So you need to get close to 2,000 just to catch up. So you have that. And then you have the IMF purporting to want to bring in a new reserve currency in the form of SDRs, which would be made up of a basket of currencies, and gold, and each country's currency will be valued and constantly rebalanced and so on. Now, China needs to get to like 6,000 tons to have a meaningful place in the basket. Otherwise, they won't vote for it. So they're actually being assisted to get their gold reserves up so they qualify. That's all. Like one of the things it's thoroughly explained in the book called The Big Reset. So the bottom line is that, right now we still have an opportunity. It's possible this volatility up and down may drag on till September. So take every pullback to accumulate more if you can, because there'll come a day where the gold price goes up many multiples one Monday morning. And it'll be too late.
Yeah. For certain. We know that definitely it's the volatility is going up and the stability of the system, because just look what happened when the Swiss did break the peg, right? It really sent the system reeling, didn't it?
Yeah, there's several currency traders that went bankrupt that morning. Mm-hmm. Like, that's how fast it comes apart.
Yeah, it really did.
So
really
things will continue happening, with greater frequency. And for the time being, this central bank and and all their Keynesian advisors are going to just recommend print more, lower interest rates even more. And, all we're doing is making the problem worse for, ultimately a giant blow-up.
rearranging the deck chairs on the Titanic, right?
Yeah.
Pretty much. So there's just no way out, is there?
Not any painless way out. It's the question now is how much devastation is going to be wreaked on this, and individually people have to look at how well they'll survive it or not survive it. That's all.
So you need to be preparing now rather than later, and because later is going to be too late the way things are going. Pretty much what your book says. And Nick, just tell us where to get the book, how to find out more about you.
Well, the book is on Amazon in both a hard copy and a Kindle version, so it's simple to order there. What people should look at, I was quite surprised, on the reader commentary, because it was quite extensive, and some of them were quite long and generally very positive. I don't think there was any negative comments at all. So people can get, a flavor from, other people right on Amazon.
Sure.
So there's that. And then on our website, bmgbullion.com, they can go there, subscribe to our weekly newsletter. It's a free newsletter. And I'm trying to keep, current in things that are happening that aren't well reported or underreported or not reported in the mainstream.
All right. Well, we appreciate that. And as always, you'll find the link in the show notes to this interview on financialsurvivalnetwork.com. And it's getting very interesting as things unravel, because they are unraveling. Just have to take a look at the Swiss breaking of the Swiss franc peg, and you know that something's afoot, and the mainstream media is not telling you the truth about it. So, Nick, best of luck, and thank you so much.
Same to you. My pleasure again, Kerry.
FSN Radio. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.